Joining Bob Rankin, Lunch and Learn on Fridays. Bob at Northeast Funding. Today we're going to talk about VA loans. If you're a veteran, if you're currently in the military, or if you've been in the military, I want to first of all thank you very much for your service. There's a loan program out there for homeowners, for veterans specifically, that is a great program that a lot of veterans are either unsure of or they really don't know quite how to take advantage of it. The VA home loan program is 100% financing for veterans. What does that really mean? If you see a home for $100,000 or $200,000 that you're qualified wise with your debt ratio of the income, you qualify for the 100% of that purchase price. The VA also allows you to have up to 4% seller's concessions. What does this really mean? If you're not a homeowner, you're wasting your rent money. You really need to take advantage of the loan program that the government put together for you serving our country. This loan program is not specific to a community or to a rural program. This could be in any community, in any city, in the U.S. for that matter. The benefit of the VA loan program is also there's no mortgage insurance. On any other loan program out there, unless you're putting 20% down, you're going to have mortgage insurance. Mortgage insurance protects the bank in the event you default on the loan. With a veteran's home loan, there is no mortgage insurance. If you were disabled while serving for the government in the military, you may be entitled to an exemption from the VA funding fee. The funding fee is a fee that is added to the VA loan program, which is financed to help keep promoting the VA loan. Now, even though we call it a VA home loan, it's really VA insured. Insured means in the event you were to default on the loan, the government picks it up, and they would have to negotiate with you. Seller's concessions. A seller's concession is when part of your offer to buy a home, in the negotiation, the seller agrees to pay for a portion of your closing costs. Well, your closing costs could be your New York State mortgage tax, title insurance, county clerk recording fee, or appraisal fee. These are fees that no matter what kind of a home loan you get, you're going to have. It also includes your escrows. By definition, escrows is your school and county taxes and homeowners insurance. So if you made an offer, let's say for $150,000 with 4% seller's concessions, that means the seller is going to credit you back $6,000 at closing to help offset your out-of-pocket expense. Most of the VA loans out there today, the veteran's getting into the home for $1,000 or less out of pocket. The only other exception that would be on that would be having a home inspection. It includes all of your closing costs. So if you don't own a home right now and you're a veteran or you're unsure of whether you qualify, I would suggest reach out to Northeast Funding or a company that you're comfortable with and have them go to the VA website and pull up what is called your certificate of eligibility. There's no charge to do that. That way you can find out whether or not you're qualified for a VA loan. If you're a veteran and you're married, your wife can obviously go on the application with you. If you're a veteran and you're not married, a partner is not allowed to go on unless they're a spouse. But if you're married, your spouse can go right on that VA loan with you. In addition, the benefits of having a VA loan program versus renting is obviously the interest rate is tax deductible, your school and county taxes are tax deductible, and you're developing equity. This is Bob Rankin from Northeast Funding. Thank you for joining us today. Next week we're going to talk about the FHA home loan program. Thank you and have a great weekend.